Good morning. It is Monday, February 26th, the last trading Monday in February. It is also welcome to Dow Day, where Amazon joins the Dow and Walmart splits 3 for 1. Now, I'll show you in the upper right-hand corner of the screen, Walmart is in the core portfolio here in TRENDSPIDER. And on other data services, it will show today, down 66%. You know, with retail being back, there are dumbasses who will 100% buy this stock thinking they are getting a 66% off discount. You know there are dumbasses who are buying that. The split means nothing. In the old days, it means a lot. To have a Dow stock, Walmart gets more weighting in the Dow than Amazon because their price is lower. But it means very, very little. Do you want to buy Walmart? I say just buy it and hold it. I've got $5,000 in there. I think it turned into $10,000 over the years. Just buy it and forget it. That's a stock that you just buy and forget. It is a well-run company, a good company with good products, good profits, and good management. They have really good management. Whatever you believe about them paying wages or doing whatever, it is a good company that provides for the shareholders. And yeah, we got some big insiders too. Let's talk about the Qs. So to start you off, the Qs, we have an entry, 438, 38. I'd be a little bit careful of this. We have a gap down here. I'm not saying that I think we have a pullback, but I think we might be due for one. I mean, in pre-market, it's up. The market's up. You're up 0.16. It's been fluttering around that even line. You have a MACD cross up here. I mean, that's pretty bullish. So, you know, here at 407, were you comfortable buying there? No. Here, you know, on Friday, did you sell out at 3% gain? Maybe, maybe not. Algorithm kind of protects you. I don't think you have a problem selling in. What I'm saying is, if you have, say, $1,000 that you want to put into QQQ and you've got the time, this week, put in, buy each 5 days. Put in 20% a day of, $200 this morning, $200 tomorrow morning, $200 Wednesday morning, $200 Thursday morning, $200 Friday morning. Just do that. That would allow you to actually dollar cost average. We may be up 2% in one day, and you may be buying at a high, but at least that way you're adding into that. Understand dollar cost averaging into things like this is the better way to do it. Now let's talk about my schedule. This week, Tuesday, I will be on tomorrow. Wednesday, I will be off. And Thursday, I will be off. There probably will be short newsletters. If I do a podcast, it will only be a podcast. So I'll release something, but it probably will not be more than 5 minutes about what's going on. And it will be a very short newsletter. I'm taking off. It's Mama's birthday. I'm flying up to New Jersey. So I will be off. But there's big news ahead. Those of you with the paid newsletter, even the free newsletter people, you got a good newsletter this weekend that kind of wrapped things up and taught you, hey, here's SMCI, and here's how you could trade it for 10, 15% swings during the day. But the biggest news is I'll be doing a live trading session. If you're interested in the live trading session, you must be a paid member. That's what I'm going to do is for the paid members, I'll do some live trading session. It will be in the morning. It will be, so I'll probably cut the podcast short. I'll email out a link to the paid subscribers, and you can join me, and we'll do some live trading. I'll have a student with me live in the studio, and if you didn't see, then go over to the private Facebook group or to my my Twitter, and you can meet producer Peter. Producer Peter will be getting yelled at from time to time about his douchey calls, about his douchey acting, about how he has a big watch, about how he flexes in cars. You can, there's Peter. There's Peter right there. You can go watch his video. He's a douche. He's just a douche. You say, yeah, this is the guy. I mean, he shaves his eye. Peter, you're a douche. But he will absolutely 100% be in the live trading session. So he's my student. He's going to be there. But yeah, take a look at that one. But in the paid newsletter, yes, you have to be a paid subscriber. I did it this weekend. The weekday newsletters, if you're not a paid subscriber, don't have FOMO. If you don't want to join, don't think that I'm trying to sell hard here, because I'm not. The live trading sessions, I may release them afterwards. I may not. I don't know what I'm doing. But as I start doing more of these, I will up the price of the paid newsletter. The good news about locking in the price now, when the price raises, you don't get the price increase. So say you get it now and you're on $15 a month or $135 for the year. That's the price that you pay as long as you keep the subscription. When you cancel the subscription, then you're in. There are some people who joined me in June when I started this newsletter and are still paying $5 a month or $50 a year. Simple as that. I mean, there are some people, when I upped it, after I started getting some content up there, I upped it at $8. There's a ton of people at $8. So understand, as I raise the price, you do not, you want to lock in that price if you're a fan, just because it'll save you money over the time. I'm not going anywhere. I'm not, cutting anything out, but understand that. But the paid newsletter, free newsletter, I'm just happy you subscribe. Please do not have FOMO. This is just a way to support me. Like I said, the Qs, there's a raft of economic releases on deck. Peter, what a douche. On deck, including January durable orders data on this is from Webull, by the way. And if you're not a subscriber to Webull, you can sign up here at Daily Stock Pick. Linktree, linktr.ee/Daily Stock Pick. But we have January durable orders and data on Tuesday and January wholesale orders on Wednesday. Corporate earnings are winding down, but several high-interest names are reporting in the coming week, which could give investors greater insight into the state of tech and consumer. Salesforce is the big name that's reporting. It's due out on Wednesday. Restaurants and several other major retailers on deck, like Norwegian Cruise Lines, AMC. I would not trade AMC on earnings. JM Smucker, I might trade that one. Hormel, Anheuser-Busch. Norwegian Cruise Line, I think it's probably a good trade around earnings. CNBC, Tom Lee says we still have gas in the tank. I mean, Tom Lee has been so right. We still have room in the tank. I think I think we see. I don't think we're at the all-time highs yet. I think we set more during this year. But I do think we see some pullbacks that are incredible opportunities. And one of the things that I said in the paid newsletter this weekend was, understand that you've got to have patience. If you feel uncomfortable buying at all-time highs, it's not supposed to feel comfortable. Just like back in October, it was not comfortable buying at these lows. Look at the charts. Look at the data. The data supports the earnings that we have. The data supports the moves that we have. Just understand you've got to be comfortable with afterwards when you're up. I mean, I don't want people coming back and going, God, I should have bought down here. No, if you didn't buy down there, then that's fine. You still have your money in the bank. If you did buy down there, you have more money in the bank. Well, unless you didn't sell because it's unrealized earnings, because we could go back there. But yeah, this was a good one. Biggest stock movers today: Li Auto surged 7% following impressive Q4. Teva Pharmaceuticals up 5%. Domino's Pizza 5% after the Q4 comparable sales exceeded analyst expectations. Biggest loser, Lunar. Their module, Brandon, sorry to tell you, their module tipped over, down 30%. It's doubled. So that's not a bad thing. It's doubled. It has absolutely doubled, but those are the biggest movers this week. There was a meaningful Buffett's shareholder letter, and I don't know if, it's not from this article. This one. It's from this article, and it's from Stock Insider Sales. We'll go over kind of that thing. But one of the things I want to point out, there remain only a handful. This is directly from Warren Buffett. There remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others. Buffett detailed in his annual letter. Some we can value, Some we can't. And if we can, they have been attractively priced. Outside the U.S., there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance. Understand, Berkshire is at an all-time high. I mean, this is trading like a tech stock. It is soaring. Look at that. I mean, that is crazy, crazy performance. In the algorithm right now, you're in a 20% gain, 12 or 13%. If you got in there, you're in a 13% run. The MACD is up at 5, way over the oscillator. I mean, look at that RSI at 82. Berkshire is at 82. And in pre-market, we're up 2% to all-time highs. I mean, let's go to a weekly. The weekly is even more impressive. Look at that. I said back here, I said this one's going to reject, but it's going to come back. I drew this line, I believe, back in October. I said it's going to come back. We saw some capitulation, some resistance there. Not to be worried. I mean, it's Warren Buffett. That's the whole reason I own Oxy, is because of Warren Buffett. So understand, we have some opportunities to trade, but like Buffett says, you got to be careful. You're at all-time highs. There's nothing eye-popping out there. The eye-poppers are going to be the growers, and that's where you want to invest in. That's where you want to trade around. Big earnings this week. CRM, Zoom, Devon, Macy's. Macy's is under $20. We've got Okta and we've got Mara. I mean, look at Macy's stock. They report this week. I think it's Wednesday. Let's see, on the algorithm, where are we? We're capitulating right here between 18 and 20. You're trading right now at 1945. Their earnings are coming up February 26th. So it's after the bell today. Look at the MACD right along there. Is the consumer good enough that they're shopping at Macy's? Is Macy's going to announce that, hey, we're looking at buyers and they're looking at the $25 price range again? Maybe. I mean, that's a good one. Snowflake. I've said buy Snowflake between 150 and 200 the whole time. It's at 229. You tanked down here to 214. Did you get it before earnings? They're on Wednesday. The algorithm got you out with 13% gain. You may have a MACD cross up here. In pre-market, you're up less than 1%. It looks like 0.51 at $230. If you haven't bought it, probably just buy it before earnings. I mean, all these earnings have been really, really good. Palo Alto is one that, got dinged on earnings. We'll go over that in a little bit. CRM just got a price upgrade from an analyst. This is one that I just bought and I forgot about. We just got an entry, 293, right before earnings. 293. Look at where the MACD is. Look at where the RSI is. Are you upset that you didn't buy at 200? You should be. This is a transformational AI data company. CRM is great. Devon Energy. They have earnings coming up. I took this out of the core portfolio. It has been on a run ever since. Yes, I am the mush in that sense. You got a $42 entry point here. That's a nice 5% gain. Do I expect you to have blowout earnings? Do I expect them to up the dividend? No. I honestly, I would be a little bit worried. I do own about $12,000 worth of this. I think it's using that 200-day at 41 as support. The channel was created and the stock's been trading within this channel. And that's the trend. If we expect it to see a reversal, then I'd rather buy it at 45 or 48 when it gets up to 55. But energy just hasn't been great. We have Okta coming out. I think with that, this is in the Seeking Alpha picks. If you're interested in Alpha picks, go over here. Want to beat the S&P? Click here for more information. Alpha picks. It is 2 stocks per month where you get it. You get a $50 off coupon. Look at that performance, 105% since July 1st, 2022 versus 32% in the S&P. That's nothing to sneeze at. But 105%, you get 2 data-driven stock picks each month with analysis. If you're new, this is what you want to subscribe to. You get $50 off if you use my link. Subscribe now. It's a data-driven portfolio. Fantastic results. Everybody that's gotten it, happy with it. Here's Okta, though. Okta, I think it's in that portfolio. It could be. I forget if it is or not. But here, let's go over here since we've got the earnings up. If you want this article, by the way, it outlines every day what's expected. HP Thursday. You can see Mara's reporting on Wednesday. TJ Maxx reporting. Zscaler on Thursday. That's a cybersecurity stock. A strong buy rating from the Seeking Alpha's Quant. Plug Power. Those of you that like alternative, I forget what it is. Is this nitrogen or something? I forget what it is. It might be natural gas. Plug Power, I don't think you should invest in it, but they could have some blowout earnings. Let's look at the alpha picks because I want to look at the portfolio real quick. SMCI is in here. Okta's in here since that's the newest one. It's down 6%. Are they going to report a good quarter? Are they going to pop? You could see that. I mean, again, if you're in alpha picks here, you get an article on Okta, why it's a good buy, why they think it's going to outperform. So tailwinds from remote work, AI, and the need for cybersecurity are fueling this top cloud-based tech stock, significant revenue. If you're new to investing, this is the place you want to be. Yes, it's $449, but they have the performance behind them that puts them in the stratosphere of, hey, they have a couple of 10 baggers. That means you 10 times your money in a couple of these. And it's since July 1st, 2022. So, but Okta's one. The one that I wanted to look at, Mara. Take a look at Mara because this is a Bitcoin miner, crypto miner, I think, totally. It is up, 10%? No, it's up 1.54% at 24. I don't expect this one to have any blowout earnings, any crazy. It is expensive. Understand, Mara is super expensive. We're looking at a forward PE of 1,573. A price to sales of 20.61. Year to date, you're only up 2.13%. The average target price from analysts is $19.75. You're trading at $23.99. This trades more on Bitcoin than it does on earnings. So if you think Bitcoin's going to go up, you can see this thing rejects right off of 30. So if you want to buy it at 24, at some point in time when Bitcoin gets a bid, it will go up to 30. But there's your biggest movers and your earnings. Secure this stock. Just so you know, Apple. I haven't sold Apple. I haven't, bought any more Apple. I think with the earnings that they announced, I did get like $2,000 of Apple up here at like 186 or something. It just automatically buys on news. It got a bid on Friday at 185. It crossed up. The MACD is well low. This is an interesting one. Apple may position their next iPhone as an AI phone. What could that look like? Great article. Apple has been underperforming the market. That's not anything that is news to anybody. I am underperforming the market because Apple is such a big portion of my portfolio. The rest of my portfolio is outperforming the market. So sometimes you have to look at those things where if you believe that the stock is going to produce a significant return for you long term and you don't necessarily want to trim it, that might be the reason you are underperforming. That's okay. The algorithm makes you 28%. If you're interested in this algorithm, by the way, here, TrendSpider, go over to the link tree first, sign up for TrendSpider. Once you're signed up for TrendSpider, you use this email link and email me. I'll send you back where you can import stuff. $892 for the year. If you want to try it out for a month, it's $129. But I will send you my algorithm. You can try it out. Here in the algorithm, Apple makes you over 2 years, 28% in the algorithm. When it tells you, see how it tells you to get out? See how, in with the 185 right there? See how it tells you to get out? For this one at 185, I would probably wait to buy this. In pre-market, you're down 0.1% at 182. The buy here on Friday was 185 on that one. The MACD's low enough that I don't think you're bad at buying at 182. What I'd like to see, though, is more of a conviction buy over the 9-day EMA. Your 50 days still moving positive. Your 200 days moving, your 50 days moving negative. Your 200's positive, and your 9's kind of taking short and medium. You're kind of looking weak. Those Bollinger Bands aren't cinched up enough to tell me that, hey, like back here, see how they cinched up and then boom, you made this move. That was a great move. I mean, if you bought back here, you had a nice 6% gain in Apple, which is a stock you don't mind holding if you're down on. I don't think that we reached this 170 mark. We have put in enough time here. If we look at a long term of Apple, again, that 185, it's trading at 182. That 50 days providing you support right now. So the 50-day has been, when you've gotten under that 50-day, buy Apple. I mean, this goes all the way back this weekly. Whenever you've gone under that 50-day, buying Apple was always a good move. Now, the long term, here's the weekly. That MACD is still crossing down. That RSI is still going down. It's at 48. So be a little bit careful, but read this article because I think it does point out, A, Apple's going to be big in AI. B, they can make AI on their phones. And with the ecosystem that they have, that's huge. Next article. This one, stocks, sales, and cash pause. This is a great article because we've heard a lot about insider sales. The Walton family sold $2 billion worth or $20 billion worth of stock. If you go over here to FinViz, if you want to know the big stock sales, just go to FinViz down here, and you can see the biggest one was IOVA, which is Iovance Biopharmaceuticals. This dude bought $45 million on February 20th. Ravi Gupta bought $28 million of DoorDash, Cart, which is Instacart. Robert Nielsen bought Prime Medicine, $20 million. You know who sold? Amazon, Jeff Bezos. You know who sold? Walton? Walmart. Ton of Walmart sales. So $860 million. I think it was like $2 billion. Bezos has been selling billions of dollars. Now, this article points out, what does this mean? Not a whole hell of a lot. While the personal moves make splashy headlines, it's important to recognize that many CEOs or founders wait until stock hit record highs to cash in and diversify their wealth, which is the case in all the firmly established companies mentioned. So that's essentially what they're doing. Berkshire announced buybacks. That's all they're doing. They're using their cash to actually, say, hey, we're reallocating this money. Even though Berkshire's at an all-time high, they're buying more. So understand that. A couple of stocks I wanted to look at. First one, NVDA. Now we have a cross-up on NVIDIA. It's in the core portfolio. It is under $800. It's at $796. It's up 1%. From a just me trading perspective, again, 3 days. Today's the day that I may look at buying this one. It closed at 78.88. You're up at 796. What worries me a little bit is the inside candle. Inside candle typically means either consolidation or a reversal. With this gap, this gap should provide support, but no reason to buy today. This was from last week. Wait until the next week when things start to settle down a little bit. I'm kind of thinking that the RSI, see how it's kind of get down a little bit? We're going to go into stratosphere again. I think you're going to go all the way back up to this. I mean, if you want to buy it right now, the high here was $823. $823. So if you want to buy it at $788, $790, you have $823 in it. For me, I'll probably just buy it. Again, it's just one of those that I'm going to sit and hold. One that I want to point out that, again, it's a buy. In my mind, it's a buy. Zscaler's coming out with earnings, like we said. This is filling the gap. 281, you had this gap down here from 363. Now, the problem is, and this is the real problem, we're going to have to pull this back to where this stock was trading in this range, because we've got quite a bit of volume here that's just missing. See how you're down here? You've got to get through this 285 to 299. People are going to start selling, and then you don't have any volume until you get back to 330. There's a bunch of mofos who bought during this time of consolidation, and they're still holding. There are a bunch of mofos who bought during this consolidation at 364, and they got hurt on earnings. Your MACD is way down. Your RSI is way down. If you believe in this stock, just buy it. The problem is, again, you have to trust the management of this company. They said there is no demand problem. There could be a demand problem. They could be completely lying to you. But I own this one. I will probably be buying, not this one, but I'll probably be buying CrowdStrike. Now, CrowdStrike hasn't reported earnings, but I like this one. It's already filled the gap up here. 318, I think, is the full gap. But 311, it is just expensive. Understand, it is expensive. This PE, forward PE is 82. If they grow into this, that's fantastic. Here's the thing. Palo Alto's only 46, and they got dinged down. This was like 60, and they got dinged down. So does CrowdStrike get dinged down? I want to get back into CrowdStrike. I've got to be patient for it. I do want to buy it before earnings, but the Palo Alto does worry me. If we look at the quant score here, you look at this, a top-tier cybersecurity company at a premium valuation. That's the problem. It's just the valuation. The quant says hold. CrowdStrike will have their moment. Strong buy. This is from Monday, February 12th. This is from February 15th. You can read all of these in Seeking Alpha. 12 out of 46. What's number one? UiPath. UiPath's Zscaler. Zscaler reports, and look at how high that is. But it's the valuation. The valuation is what's killing it. If we look at Zscaler, whose earnings are coming up before CrowdStrike, I think these are on Thursday or Friday, 29th. Look at Zscaler. It's already filled the gap back up. This one was on a run. And if we look at Zscaler's valuation, again, these are different companies, but its forward PE is 76. You can play this one for earnings. Look at those candles. It's coming back. The trend line's clearly up, still up. The average target price on this one is 253. You're trading at 235. Most recently, analyst January, 311. So Zscaler, solid cybersecurity company. I'm looking at CrowdStrike. I'm looking at that one. Now, we've got two stocks in the core portfolio I want to point out that I do think are buys but are expensive. Shopify. It has you out in the algorithm. I'd say get this with just a 7 handle, under 80. I think you're going back. It has put in a nice capitulation. 73 is probably your bottom price. Unless we have some type of huge turnaround or they make some type of crazy announcement, which I don't think is possible. You got a nice gap up here to 88. I think you get back to that. This is an incredibly expensive stock, so this is a buy and hold. This is just a great company. Another great company that's actually killing it is Uber. And you're seeing they gapped up. This has been well more than 3 days since this. What this was the buyback and a dividend announcement, gapped up. It's been 3 days since that. Buy it. Under 80, buy this. I was screaming at 40. The ad tier and everything on this are fantastic. So those are two in the core portfolio I think you can buy. Micron. This is an interesting one. I listened to a podcast this weekend, but Micron announced that it began volume production of HBM3E, which is the high bandwidth memory 3E solution. This is part of NVIDIA's H200 Tensor Core GPUs. Now, understand, I listened to the Compound with Josh Brown this weekend. It was a fantastic podcast, and it was about NVIDIA. And one thing that all the guests mentioned was a lot of people think that NVIDIA is just a chip company. Well, these H100s and H200s, all of them are like 70 to 80 pounds. And Jensen Huang said this on the call. These are like 80-pound racks. They're not just small chips that you put into a device. These are huge racks. That's why SMCI is so good at installing this stuff, is because NVIDIA does this. Now, here's the ding that may come on SMCI, and it was just mentioned during Jensen Huang's call. But it was a pretty good focus of it, I believe. He said, hey, don't count how many units we sell going forward, because we are turning into a services company. So everybody who's bought one of these H100s, H200s, we have software and we have service that we will continually sell you on a subscription basis. That's a game changer for NVIDIA. That's a different business model. And I believe that changes this stock. 100%, I believe it changes this stock. That's why I want to buy it. And understand, all of these other companies like Micron that are putting stuff in here, they can't produce them fast enough. Here, NVIDIA's up 59% year to date. Average target price, $868. You're trading at $788. I'm sorry, it's $797 in pre-market. Get it on while it's under $800. I mean, you want this when it's under $800. It's about to go over $800. I don't know if you'll have a chance to buy this under $800 after you listen to this episode. But these are the chances that you want to take in this market. You want to find good companies with good products, with good earnings, and good management that are doing this. I don't think NVIDIA is one that's going to be overpriced. I think it's going to bounce off that 800 price. Don't try and nickel and dime it. If you're buying one share, what does it matter if it's $790 versus $800? If you're buying 10 shares, it doesn't matter if it's between $790 and $800. Just buy it. And listen to that Compound podcast with Josh Brown. It was great. Social request. George from Spotify wants me to know what I think about Wolf. I think this is the financial one. Is this financial? Let's see. Let's see what Wolf does, because I want to go over here. Oh, one other thing I want to mention is with seeking out for premium, you get these emails. This is your daily summary that you get when you import your portfolio. It's fantastic. Two that I want to call out. Netflix got an upgrade. This is a $700 stock. Just buy it. Oxy got a downgrade. The only reason I'm holding Oxy and the only reason this is in the core portfolio is because it's a Warren Buffett stock. That's it. And the other thing I want to point out before I get to George's Wolf is the Savvy Trader trading portfolio. If you guys want to know what's in this, you're going to have to pay. It's a subscription. I do give it for free on my newsletter. So, you do get additional reasons. You get additional timing, things of that sort. I do think it is worth the price paying, but I wanted to show you my performance against the Qs. Year to date, I am up 43%. The Qs is up 6%. Here are the gainers, and here's the all-time. SMCI is driving this. Uber is driving this. Meta is driving this. AMD is driving this. NVIDIA is driving this. Amazon is driving this. Shopify. What are my herders? It's DocU, it's PayPal, it's Pins, it's Mara, it's IONQ. Mara, I've just held on too long. That's it. Pins, I bought it, mistake. DocuSign, bought it, mistake. PayPal, bought it, mistake. All of those will go away. IONQ, I can sell that for a gain. That's going to pop up to 13. But if you're if you're one of the paying subscribers on this one, that's great. If you're not a paying subscriber and you don't want to pay, just subscribe to the core portfolio on Savvy Trader. That is 35 stocks where, again, I go over these things all the time, like I just did. But even this one, this is an even weighted portfolio. This is an even weighted portfolio of 34 stocks. Okay? There's your NASDAQ at 6%. That's great year to date. The core portfolio, which is even weighted, is 17% up. It's driven by SMCI, NVIDIA, Uber, Meta, Lilly, Costco, Amazon. A lot of these you don't see in the trading portfolio, like Costco, like Lilly. Those aren't tradable. Palantir, I don't own it in the trading portfolio, but I will trade it again. Qualcomm. Again, this is a portfolio that I bought at the all-time highs in June of last year, and I've added to it and taken it out. What I do is when I take a stock out, I take 100 shares out, and I put 100 shares of a new stock in if I buy it. If I don't buy it, I just take 100 shares. Devon, I took out of this portfolio. I should have. Yeah, I think I'm pretty sure. Yeah, I did take it out of this portfolio. I took it out, so I just sold 100 shares. Coke, it's above 60. I might take it out of the core portfolio because it hasn't done shit. Apple, it's underproducing. Since I bought it in June, it's down 1.56%. Tesla is down 30%. That should be in your portfolio, but it should be a trade. But again, the point is, if you're going to make a portfolio, you're going to have your winners, you're going to have your losers. I do not suggest an equal weighted portfolio. I suggest you weight it in the companies that are working. Don't water your weeds. Get rid of those losers. The core portfolio is just meant to have stocks in there that are solid performers. So let's go over here and we'll go to Seeking Alpha. I didn't want to put that in the search. I wanted to put that in the Seeking Alpha search. So let's see what Wolf is. Wolf. From a chart perspective, you're down 0.13 today. George. What makes you think this is good? Let's see. Wolf is, let's go down and see the description. Operates a powerhouse semiconductor, focuses on silicon carbide and gallium nitride technologies in Europe. If you just got into this because it's a semiconductor company, that's the wrong reason to get into this. Look at the valuation, C. Look at the profitability, F. Look at the momentum. You need to have Seeking Alpha. If this is a company that you're interested, this guy on strong buy on Thursday. Look at the analysis. He's going to tell you more than I am. I'm going to tell you from a chart perspective, from a valuation perspective, I want nothing to do with this. I want absolutely nothing to do with this. Let's see. Wall Street gives it a buy. What's its average? You'll have 5 strong buys, 3 buys, 8 holds, 2 sells. Your average is 41.43. You're trading at 23.78. Do not buy this one. Look at that price target just going down. All they're doing is taking that price target down. The monkeys are just taking the price target. Do not buy this one. That I don't even have to show you a chart. It's not worth it. Brandon, new listener to the podcast, he emailed me. Enjoy listening, newish to investing, and enjoy learning in stocks. I was curious your thoughts on SYM. Let's see, SYM. What's SYM? SYM is Symbotic. Let's get rid of that. I hate that Apple Safari does this to me. It's a sell in the quant, a pretty hard sell. The average target from analysts, you have 10 analysts, 10 strong buys. Wow. Wall Street really likes this, but the quant really doesn't. Let's see the summary. Symbotic. What do they do? An automation technology company engages in development technologies, blah, blah, blah. Let's look at them over here because I want to see Symbotic, SYM. This is a $21 billion. It's not on any index. I'd be careful. Specialty it's industrial. Year to date, it's down 21%. Something's up with this. The average target price 54. You're trading at 40. Something's up with it. February 7th upgrade with a $50 price target. You're trading right now at let's see. Let's look at the chart real quick because let's look at the 4 hour. This one doesn't seem as bad as Wolf, but it still seems bad. There's nothing to trade here. They had their earnings. They're losing money. I can't imagine why. This one, again, I trust the quant. Let's learn why it's bad. Characters, did the company has returned common equity? Yeah, it's losing 656%. While the industrial sector is up 12.3%. Again, when I say this kind of stuff, look at this, 70 out of 75 in the industry. What's the number one? SKFRY. This is from machinery stocks. MLI. I don't understand any of these. I don't know anything about these, but Brandon, I'd probably, if it were me, if you have knowledge of this, you know better than I do. From an actual stock standpoint, what I'm seeing no support down here. I'm seeing it filled this gap down to 38. You might have a nice little rebound. Might be good to trade. If you want to know how to trade it, my paid newsletter right here using candlesticks. But I would say this doesn't interest me. Nothing about it. Nothing about it. Now, mind you, you're up 306% in 2 years. So from a long-term perspective, this seems like a good one. But they're not making money. I would say this is all hype. They're not making money. I can't imagine why this went up like that, but you know better than I do. Edo Surf, Hey, love the pod. I'm long in Jumia and wondering what you think. Touted as the Amazon of Africa. They're turning the company around, cutting losses on the road to profitability. The road to profitability is often led with, I mean, let's look at the downside of this one. We'll look at the long term, because the long term is what you want. Your 50 days starting to turn. You have some type of confirmation up here. Your 200-day just appeared. It's below its 50-day. This was all hype. That was 100% hype. If you are looking at this one, I would probably look here. And yes, I mean, just like Melly is touted as the Amazon of Latin America, this is touted as this. Its valuation is crap. Its growth is crap. Its profitability is crap. Ranked 22 out of 31. I don't like this one. This is one you can trade. I mean, I don't think that I would necessarily be. They're losing $104 million. Cash on hand, they have $100 million. They're going to dilute you. There's no reason. Here's the thing that I want to tell you. And if we go back, you can look at Amazon. Amazon's a good one because Amazon didn't start turning a profit for a while. And let's look at we'll look at the monthly. Let's go to the quarterly because we can go back. Okay. Here's Amazon. Here's Amazon in 1999. I mean, did you want to buy it at $4? Sure. Today it looks like a great buy, but they weren't making money. And so, here, this is down 92%. In 2 years, it's down 92%. They weren't making money. Even during this time, they weren't making money, where you were up 600%. You were up 600% and they weren't making money. Then you consolidated. I would much rather buy a company here in 2007, let's say 2008, and lose 61% because they were making money, but then the housing crisis killed you. But if you bought here long term, you don't mind this. They were making money. You're up 2,000%. They were making money. This is the point. You don't want to get into something when it's not making money, because Amazon could have easily gone the way of Jumia and lost everything. So Ito, not something I look at. Here's George's second one. He wrote another one. Hey, Gary, Semi's going crazy, but Wolf got hammered. I know silicon carbide getting the boot from Tesla was a big deal, but hard to figure out why somewhere in the future. George, just get out of Wolf. I mean, semis are on a roll. Why would you get into a loser? That would be my point, George. There's no reason to even look at that. Your semis are on a run, a legendary run. And I would not even worry about Wolf. Don't worry about it. I mean, if you're in it, cut it. Don't water your weeds. It's shown to be a loser. Steven, IDEX. Steven from Spotify, IDEX. This is Ideanomics. Let's see if this is a good idea. Nope. I mean, IDEX. What do they do? Let's see. Ideanomics. Farm and heavy construction. It's an industrial. Your industrials. Here, let's look at this. Okay? Let's just look at XLI, because this is an industrial and you want to look at IDEX. Okay? Let's look at this. Let's chart this, because I'm going to select symbols. I'm going to get rid of we don't care about the S&P 500. But if you're going to ask me about Ideanomics, let's see. I mean, 1 year, you're down 94%. XLI is up 18%. Let's just cut it down. Year to date, I mean, IDEX is down 49%. XLI is up 5%. If you're going to buy an industrial and you're going to try and time it, trade it. Trade it. But you're going to lose. I mean, just outright, you're going to lose even if you trade this on anything long-term, Steven. You're just going to lose. Go over to Seeking Alpha, find out what industry it is, find the spider sector symbol, and then compare it. If you're losing, it makes no sense. Just buy the spider sector. That's it. I mean, industrials have been on an all-time tear. So IDEX, no, I don't even have to look at the financials. It's a mess. Chatty from Facebook. Hey, Gary, thoughts on ALTM? I actually originally bought LTHM for the long term, but when it merged with another company in January, it became ALTM. I am not I'll tell you right now, I don't even have to look at this. It merged with another company and probably lost. This is lithium. Lithium is one that I don't think it's a horrible play. It's down there. It got overvalued, and this will probably trade with the commodity. I mean, honestly, this will probably trade with that. That's why Wall Street thinks it's a strong buy. That's why Seeking Alpha Analyst thinks it's a strong buy. The valuation of this is probably high. I mean, we can look at the quant factors. Momentum revisions. Valuation's a B+. 39 out of 45. It's a specialty company. Lithium engages. Let's see it. I mean, I'm not big on material companies and buying them long term. You see me with Cleveland Cliffs. That's a perfect example. There's a range in material companies. I'm into trading it. Now, this one, I don't know that it has any hope of coming back. I mean, right now at 462, algorithm has you in, doesn't have you out. I don't know. I mean, Chatty, you'd have to do more. If you believe in lithium, stay in it. I don't. I just don't. So let's talk about scans now. NVDA. I said buy it under 800. It's back down to 789. As far as if you want to trade, and you want to buy on a short term, go to a 5-minute chart. Just take a look at a 5-minute chart. I mean, NVIDIA here on a 5-minute chart, you can take a look at it. It's got a couple of candles today. Nothing that tells me, oh my God, I have to buy this one. Look at those candles. They're a lower low and a lower high. Nothing makes me want to rush into this. If we're looking, how everybody's buying this, let's look at some volume profiles. We'll take this back to pre-market, right before earnings happened. Did you get buys? Yeah, you got a lot of buys here between 775 and 782. I would be buying in the 780s. If you're looking short term, I would be buying in the 780s. If you're looking long term, just buy it. FBCG, this is the Fidelity Blue Chip Growth in the 4-hour here. You have a buy. I mean, this was a buy at 33.22. This is a solid company. Amazon, we have a buy here. This is a buy. Remember, Amazon, I think you have an opportunity. The algorithm just hasn't gotten you in since 152. You're still in it. All-time highs, you still have room to all-time highs on Amazon. To about 187, 188 all-time highs. The Qs, we talked about the Qs having an opportunity. This was, you're down 0.09. The Qs on Friday, we had a buy-in here at 438. You're trading at 436. If you want to buy the Qs, buy the Qs. Microsoft has a buy. I said get it under 400. I think it dipped under 400 for a little bit. Uncomfortable to buy. Then NVIDIA pushed it up. Again, it's at 409. Long term, just buy it. Google is an interesting one. Brad Gerstner tweeted out an interesting tweet that I actually retweeted. And if you want to follow me on Twitter, it's twitter.com/dailystockpick3. We're going to delete this because I do want to see. Brad Gerstner and on his podcast talked about so Twitter had to roll back their Gemini stuff for AI. If you didn't hear about it, fairly embarrassing, not crazy embarrassing. But this goes back to 2022. And essentially, this is Brad saying, if you own growth stocks this year like we did, you got your face ripped off. This is 2022. As a hedge fund, we expect to lose less than our indexes on the way down. This year, we lost more. Our big flow of 4, blah, blah, blah. He goes back to this. Now, he posts about how good the Meta and Uber and Microsoft did, all of those. Here it is. The cultural mess at Google, which is now a product and business mess, is not surprising. See below my debate But it appears Sundar, what he's saying is it's a cultural issue, and it's on his podcast, the 2Bs. This is good. This is a really, really good one. Episode 122 of the pod, especially Sachs on AI, but Friedberg take on Google. Bad analysis conclusion that makes him an apologist for the age of excess and the bloated culture at Google. Google needs to do what Elon did at Twitter, which is cut 80% of the workforce. I think that would be what would get me back heavy into Google. Until then, Google, in my mind, I think you're just taking a chance. But it's a chance that, hey, in long term, I think they're good. Google's opportunity has always been in search, and with AI and what OpenAI is putting out there, I think their search revenue is just it's in danger. But I'm still long Google, still hold a ton of Google at under 100. So I'm still good in holding that. But at times I'm pretty sure I'm going to trade that one and trim it. Qualcomm, chips are just going nuts. Qualcomm is one. We're in the core portfolio here. I think it's $170 stock in a healthy environment. 148 was the initial buy-in. Cleveland Cliffs, we have a cross in. Ones that I want to point out. And there were a lot of buys in the scans. So understand the scans are just, hey, these are solid. ANET, Arista Networks. This is ANET. This is a solid company. Gets you in here. 267. Now the algorithm underperforms the asset, but you're clearly in an upward trajectory. Remember, long term, you want to be in an upward trajectory. Part of trading stocks is understanding higher highs and higher lows are good. Lower lows and lower highs are bad. And you want confirmation on that. If you don't understand that, I would suggest signing. It's $15. Sign up for the monthly on the paid newsletter. Just read this article. It is solid. Candlesticks, the education about what I look at. That's what that is. So this, Arista Networks, higher highs, higher lows. Solid company, gets you in. Zoom reports this week, and they had a cross up on the 4-hour algorithm. Oh, stop. I don't want Bitcoin. We want ZM, not XM. Zoom here. Zoom on the 4-hour algorithm. You can see this is a tricky one because I do think that Zoom, this in October went up. This is a company that I think has some really good product initiatives. Its PE is a little high, but their forward PE, and this is their projection. If they continue with that projection and they continue to give good guidance, this is a $70 stock trading at 63. Honest to God, the average target price is 79. I think this is a $70 stock trading at 63. And their earnings are later this week. Look at this. January, downgrade, $60. They downgraded Wells Fargo in December, but they gave it a price of $70. If you're looking at insiders, they're selling, but they're selling closer to 70. I mean, there were some sales here, but again, insiders, you take it with a grain of salt. I don't know that they necessarily think that it's overvalued, but they have to get the projection right. They have to get the guidance right. This is one of those that I think is, if they give weak guidance, if they just kill earnings but give weaker guidance, you're screwed. Pinterest, we have a cross up here at 36.09. You're trading at 35. I think at some point in time you come and cover this gap at 40. If you want a dollar cost, now I bought at 37, 38, somewhere in that neighborhood. I may even have bought at 40, but I'm down on this one. I will get out of it, but I will dollar cost average my way out because, again, take a look at the long term. Higher highs, even though you're down from this, we've turned higher highs and lower highs, but we're kind of getting that turn. The 200-day providing some resistance. I do believe this is a $40 stock. I think with some Elliott management in there, I think it's fine. Cisco, this is one, I think it's trading at 46, 48, somewhere in that neighborhood. 48 is a $50 stock. 49.01, buy. You are in the down, but you got kind of confirmation. I might wait a couple of candles, a couple of days to get into this. I think it's a $50 stock. I think you're getting back to 50. This is just one you get into. Deere, we had this one was beaten down. Could it get a bounce after earnings? I mean, this got beaten down on earnings, 364. Now, from a solid, hey, where do you want to trade? You want to trade on the bottom of this. You want to trade around 350 or 360. This is the range that it's been in. I don't see a reason why it wouldn't get back to that range. There again, it's a little bit expensive. I mean, for an industrial or a machine company like this, heavy machinery, 13 is the forward PE, 10 is the PE. Average price target, 422. You look at the most recent ones, 430, 396, and you're trading at what, 364? So I think it's just a beaten down stock. Deere is one you can take advantage of. Nike, I would not get into Nike. I am in Nike at about 105 or so. I think it's trading at about 105. I may be in at 112 somewhere. Oh, I may be actually in at 122 because I bought right before earnings. Yeah, I may be in at that 122. At some point they cover this gap, but right now I would probably wait 2 or 3 quarters. I would rather you buy Lululemon or On. So those are 2 growth companies. Lululemon has been tanking. It's been coming down. You're at 458. 468 is where you're trading. You've seen a nice little rebound. They have their earnings coming up later in March. So you look at the MACD. It's way down. It's expensive. Understand it's expensive, but I think you could trade that one too back. On, this is one you buy under 30, you sell when it's over 30. It's at 33. I mean, right now you have confirmation to trade this one, but those are the 2 that I would rather buy than Nike. Another one that has been a solid, we're talking about a payment processing company, ADP. This has a cross up. The 232 back here in January 2nd. Don't you wish you got in there? But it's still got confirmation, still moving. It is, I believe, at all-time highs. Nope. Still have, here, you have 274 in this stock. 274 you have in the stock. Now, it probably will bounce off of that, but you have confirmation. So it just got in the 4-hour algorithm, you got it. We got a bunch of levered ETFs, including NVDL. If you believe that NVIDIA is going up still, NVDL might be the play. If you want to trade something, trade this one. This is a 2 times levered on NVIDIA daily. Do not trade this and hold it. Do not think you are buying NVIDIA stock. This is 2 times daily. So if it goes down a bunch, you don't have the opportunity to get back in and dollar cost. It just moves too fast. Trade this on a daily. Do not hold this for a week. Do not hold this for more than a few days. But if you want NVDL, 205 was the initial buy-in. The algorithm still has you in. It got another MACD cross up here. The RSI is a little bit high, but yeah. We also have TQQQ. This is the triple levered. The algorithm got you in. The MACD doesn't look way high on this. $60. I mean, I was screaming buy under 50 here, and I thought it was going to be a good buy. Did I buy it? Nah, I sold it like 55. I took profits. Am I upset? Nah. I took profits. If you take profits, you can't be upset. So I did on Facebook Live, or YouTube Live. I was talking about a 5-minute chart of SMCI, and that's what trading wise, I thought it was a good buy. Let's look at the 5-minute. And I'm going to do extended hours because I want to see how it performs so that I can show you guys. Yep. See, and I said I wouldn't hold it at open. I believe I said that. I'd never hold. If I'm trading in pre-market, I never hold it open because you never know what's going to happen. What happened? A bunch of sellers showed up. A bunch of sellers of SMCI showed up, and you're still having weakness, and your MACD is still going down, and your RSI is down at 32. But this, I think it was here. It got some confirmation. Was it 6:45? No, I think it was around 8, around this time. So I think you had some opportunities to sell it. Yeah, you had totally turned over. So you absolutely, if you got in at what, 876, I think was the price that we got in at. You had some opportunity to sell it before it actually crashed down. You had a nice candle here. Could have sold it at 884. I mean, again, if your stop losses are quick and you have the buttons on your thing and you're trading quickly, yeah. Day trading, if you're interested in day trading, here's the paid newsletter. That's it. Let's talk about some of the sponsors. TrendSpider. If you're interested in my algorithm protects you from the upside, protects you from the downside, trades in that nice little middle ground where you can make some money on most stocks. So if you're interested in that, this top one, TrendSpider is $892 for the year. Understand if you've got a big enough portfolio, that's not a big deal because again, the watch list, the scanners, the algorithms, they all kind of pay you back, whether it's saving you money and getting you out on the downside or making you money on the upside, either one. Or you can play the downside. Say you want, but when TQQ turns over, you can play SQQQ. The second one, Seeking Alpha Premium. This is the one that I want you to get. It's $189 because you get $50 off using my coupon. This allows you to look at all the quants of the stocks, allows you to look at the analysis of the stocks, allows you to look at everything. This is what I want. For $189, there is no reason why you shouldn't have this. Again, I think it's for everybody who's got a bit. If you've got a $5,000 portfolio, do not spend $189 on Seeking Alpha Premium. The information is out there for free. You just have to know how to read it. You're going to do more work. But if you have a $10,000, $20,000, even $100,000 portfolio, $189 for a year is nothing to pay for Seeking Alpha. The amount of benefit that I get out of looking at that, it is incredible. Your third thing, down on this link tree, it is Alpha Picks. This, if you're brand new to investing, again, it's a little bit expensive at $400, but the return is worth it. July 1st, 2002, if you had just bought every stock in their portfolio, you'd be up 105%. So say you had a $10,000 portfolio. You just bought this equal weighted stuff with all of these stocks on July 1st, 2022, if you just bought it, and today, as of February 11th, you're up 105%. It's up even more now. I mean, let's see. Let's go to Seeking Alpha, and let's see Alpha Picks, because I am a customer of this one. Alpha Picks, let's see. And we'll go to performance. It is up 114% since July 1st. So you can see some of the big movers, Modine. A lot of these I would never have gotten into. And they're up 884%, 307%, 244%, 231%. Solid player. But again, that is Alpha Picks. That is the third one down. Fourth one, if you don't have Webull, you should get Webull. Webull is unbelievable. It is by far my favorite platform. I think it's fantastic. Daily Stock Pick newsletter, we talked about that one. If you want Patreon, 1 hour, one-on-one with me, I think this is crazy. I would become a founder member of the paid newsletter, which is $400. And then you schedule a 1 hour meeting with me. I will go over, if you think, if you're getting beaten up at the lunch table during the cafeteria hours at school, I'm there for you. If your girlfriend just broke up with you and you want some personal advice, I'm there for you. Just an hour. Talk about anything you want, Patreon or founders member. Visible. Did your service get dinged out by AT&T on Friday? Well, you know what didn't? Visible. And Visible, you click on that, you get $20 off your first month with that link. Check out the plans. Well, it's $25 or $45 a month for unlimited. I have the $25. Personally, I'm not on the $45. I don't feel the need to get the faster one. If you're at work, if you want, if you have that desire to get on Instagram, to get on TikTok, and you need to do it quickly, yeah, $45. Again, this is for single lines, for family plans and stuff like that. I think you might be better going somewhere else, but this is my thing. And again, I don't sell stuff that I don't use myself. If you want a Tesla, because I just bought a Tesla, you can get $500 off and 3 months free. AT&T, refer a friend. I have that because I do have AT&T in my house. It's been a solid player. Savvy Trader. These are all the trades that I do. This is the core portfolio, everything that you want. If you want to join our Reddit community, we got a Reddit community. If you made money, I got PayPal, Venmo, and Cash App right here. So I don't ask for money up front. But again, any of that stuff is good. Tomorrow I will be on. Wednesday I will be off. Thursday I will be off. You will get newsletters. Sign up for the free newsletter. Thank you guys. I'll talk to you later.
Every morning I wake up to the sound of the trading bell. My heart starts in fear.